Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA Wrap. Where we take a look at these markets, we do it from a neoclassical perspective. Each time asking ourselves that one question: what happened today, and what does it tell us about the coming ones? I do this show 4 times a week, every Monday through Thursday. I broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. Subscribe there. Anytime content's pushed, you will be notified, which is a good thing. As far as what did happen today, it was another day, another down in the yo-yo market that we've come to love. It's central bank action today, or overnight actually. The yuan was depreciated 1.9%. They took it even lower than that on the expectations that there's more to come. That, of course, central bank intervention, more of what we've seen, continuation of what we've seen. That intervention, of course, has all of its ripples, and those ripples felt immediately across all these markets, as we'll see here as we get going. Let's look at the ending numbers to start with. So we end up down today. Big up day yesterday, big down day today, down 1.2% pretty much across the board, 1% on the S&Ps and the Russell. Commodities hit again as a result of this. Copper, oil. The one that did push higher was gold. Gold pushed higher on the devaluation of the currencies. We had the bonds, a run to safety. So all those trades that you saw yesterday, they all got flipped around today. And what was really interesting is that the dollar, you would think, actually would get hurt initially on the devaluation. It gets, appreciation against the yuan, but that's just such a small percentage of the dollar index, the weighting in it, that you wouldn't think it would matter, and you would actually see the European currencies and so forth go up and push the dollar down. Well, that did happen to start with, but by the end of the day, the dollar flipped around. It was break even on the day. Let's look at the charts again. So what did we do today? We actually got under yesterday's low. We got under it with more volume today. So we pushed down with more volume. This thing's going to try to push farther. That's the S&P. If we look at the NASDAQ also comes down, but it doesn't push with as much volume as this swing point low, I don't believe. Let's look at it. 20. What's our number there? 22, 20.2, 19. Yeah, so we don't have as much volume. So you get under it, you push under the swing point low, you get back over it. So that looks like another stick save. Looks like that one can try to bounce. If we look at the NDX also gets under the low, back over it, also a little bit less volume. And finally, if we come to the Russell, remember, had broken under, got a big spike up yesterday. All those spikes yesterday had no volume. Today you come back down, you're doing about 370 against the 411, and you didn't quite hit it. So that one's a toss-up. It's a doji. It doesn't really tell you much. It is lower, a little bit higher volume, so if anything, bias a little bit lower. Now the big ripples, of course, were overseas, and it was overseas in some of the more minor economies, and as a result of the currency devaluation. Here's Taipei. We've had Taipei on a big downtrend for quite a while now. That downtrend continues. You try to spike higher, but you end up lower, and it's down here under the lows. It's already done a retest and it's trying to regenerate lower. If you look at any of the indexes in Asia, with the exception of Shanghai, those all tried to trade lower. Here's the Shanghai, a little doji, more volume. That should try and test again tonight. If I look at the Nifty 50 over in India, here we have the situation where this thing is trying to roll back over, come back into these lows. This is the little area here that you're either going to get the support or you're actually going to roll it over. That one also some pressure. If we look even at Japan, now Japan's currency actually traded lower against the dollar, which typically rises, and it did go up and it tested, had more volume. I think, than both of these. That's 166. Yeah, it had less volume than here, so that's a test failure at the highs. So that one's actually going to try to pull back. If you look at Korea gets hammered pretty hard on the currency devaluation. Hong Kong, a little different. Of course, that's much more tied to what's happening in Shanghai. So that one tried to push higher but couldn't, or at least couldn't stay higher. If you look at any of the commodity producing companies, they took a hit to start with, but they held pretty well. That's true here with Toronto. That was also true in Brazil. Brazil was testing those lows, and as they tested into those lows, got under them, back over them, less volume, they look like they're actually going to try to bounce. And so, the ripples are everywhere. Some of them expected, some of them not. If you go to Europe, and even though I don't have the volumes yet tonight, you see a push down here in Europe in the DAX, and essentially you've put a tax on these indexes now because the currency devaluation in the yuan makes the European exports more expensive, so that's going to hurt their markets and it's going to serve as a tax on them until what? Until we get more QE, which I am sure somewhere down the road here before we know it, we will see certain announcements in Europe to that effect. You don't do these things in a vacuum. So when China devalues the currency, it's only for a short period of time that they get the benefit of it. Others are going to do other actions, right, to compensate for whatever it is that has taken place. And you will see those compensations come. So turmoil overseas, U.S. feeling some of the pressure as a result of it. And then if you walk inside the U.S. and look at some of these sectors, some of the leading sectors are starting to try and break down. Here's your biotechs. Now the biotechs haven't broken, but if they start breaking swing point lows and they start taking them all out, and there's a lot of them down here, so you can, let me highlight these so you can see them, but you've got them all over the place, all nested together. That one was hit already, but the rest of them are sitting there. You take these out on this time frame, that means you're going to take them out on this time frame as well, and that's where you can start getting larger moves. Transports, actually the transport's still holding pretty well inside day to day, so nothing there today. Stocks, the semiconductors, volume still as they press down, they look like they're going to try to test the lows again. And then if we go over to basic materials, these got hit, not as bad, but they got hit again. And then energy stocks, surprisingly, actually held up today, as did the gold stocks, even though oil was down a huge percentage. And that's a divergence we haven't seen in a while. That may be signaling something in this particular sector. But overall, if you look at the rest of these sectors, they got a pretty good hit today. Technology, Apple was hit for 4% or so. Here's the XLY also getting hit. Volumes coming out of these. The sectors that have been leading us are now the sectors that are starting to push down. And if that trend continues, it is going to be an issue. So the bottom line here, if we look at what's happened overnight in China, if we look at the way the indexes are set up now, and especially what's happening overseas indexes, it looks to me like you're going to get more pressure both in Asia and in Europe, and that's going to put more pressure on the U.S. markets as a result. And if we pull back over one more time to look at the U.S. markets, and I'll just pull up the S&P one more time. You have multiple swing points all nested together. You have them here, there, and if you pull this back and you put it on the weekly charts, you also have them here, here, and if those break, right, and that was the low of the range. Remember, the range is up in here, so you've got this big range that's still holding. If that range breaks, these swing points break, you have to start thinking about the lower ones, and those are nested together as well down here. And finally, if eventually those break, the lows here are also the lows on the monthly time frames. So you can see the potential. That potential is a cascade down. It's a break. Multiple places on the way down if it gets rolling. Hasn't rolled for 3 years now. The scenario that's set up is that you have less and less fringe buyers at these lower price points. And what I mean by that is anyone who's tried to short this market has lost money. When it gets to an extreme point where no one wants to short, when prices begin to fall, there's no fringe buyers to buy anymore. In other words, those shorts aren't there to cushion the market on the way down, because they're the ones that typically come in and buy back what they have already sold short. And so they act as a buffer on the way down. Well, there's fewer and fewer of those that are going to be there to act as a buffer. And if they're still in this market, they probably shorted quite a while ago, and they got a long way to go just to get back to their break-even points. So, you know, I think that the danger continues to build here. It's the danger I've talked about for some time. This week, it's going to be an interesting week. If you don't have plans as to what you're going to do, if this market starts to break, it would be a good time to think about it. That's it for tonight. Have yourself a good one. Thanks for joining me. Tell a friend, tell two. I'm LA. This is and it was your daily NeoTA Wrap. Have a great night. See you next time. Good night.